Hello traders, today is the 27th of July 2010. This is the second part of the video that we title How to Trade the Overbought Slow Stochastic. How to Trade the Overbought Slow Stochastic. This is part 2 of how to trade the overbought slow stochastic. And if you want to know how we enter this trade at 10545, this is the Dow Jones Index. We sold it right there at 10545. Okay, it's still going down. Right now it's at 10519. Okay, since we sold it, there was this kind of people pushing the price up. They find resistance here, they push it down. They think it's a double bottom here, they push it back up here, only to fail big time. And this support level here is broken, and the price went down. The price should go down more, but we noticed that there is a very strong bullish sentiment towards this Dow Jones because of the earnings that were excellent than people were expecting. Okay, so a lot of people are so bullish buying these Dow Jones, like I don't know, there will be no tomorrow. Okay, but we know that this is the time to sell it. Okay, and it make it very difficult to enjoy the trade because a lot of bulls are still thinking that the price should go up. So at every movement to the downside, people are buying here. As you can see here, people locate this level here as a support level, and they bought it. It went up a bit. It came back here. People think it's a double bottom. They push it back up here. Now they find resistance. Now this level is broken, but still people are busy buying at every support level that they see it. But what I notice here is not very good for Dow Jones because what usually create a heavy sellout is when people are so bullish, okay, and then suddenly they see the price going down non-stop, and then suddenly everybody starts selling too badly, okay, and then they will crash the market. This is very, very bad because I don't know if people are buying when they're not supposed to buy, and then they see their hope being dashed away. That creates, okay, a heavy selling because the bear that are overwhelming them will force them, okay, to close their position, and then creating a huge than normal volume, bearish volume, and then the price just collapse. This is not good for any market. That's why I believe that people should learn to know when they should sell and when they should buy. Otherwise, we'll have a non-stop whatever measure people take in the market. There will be always a market crash because what usually happens before a market crash or before the market falls big time is that some people believe that the price will go up, but their decision is completely wrong, okay, because their majority, they are pushing the price up, but they are completely wrong. So what usually happens when the professional notice that this is a wrong movement and then they start selling, falling all this majority of people to close their position, that's what will cause the price to fall so fast, okay. And I'm afraid that the same thing is going to happen here if this bullish tendency is still maintained. What I was saying to people is that we should have a gradual selling instead of having instant heavy selling. Instant heavy selling is not good for any market. I did some video in the past and I maintained that on the weekly chart of this Dow Jones, and we have these V buttons here. Those who watch my previous video know what I'm talking about here. And the price ran away, and I said that the V button is only valid in a strong economy environment. Now what is happening now is that even though the recent earnings are still good, okay, better than people were expecting, okay, so suddenly people start buying heavily. They think that everything has changed, but I can assure you that most of the bearish market, will last at least 4 years, okay, before the dust will settle. Okay, that's how I like to put it to you, before the dust settle. Usually this thing drag on, and people are too early to buy. That's my personal view, and my personal view is not a science. Okay, I can be completely wrong, but as I show you on this weekly chart, this V button is not justified here. The Dow Jones will try to seek same thing for S&P 500. Okay, same thing for Nasdaq. They will all come back to seek a double bottom pattern, and the market will be happy to see a double bottom pattern in this environment compared to a V button. That's why the price was in this zone here. It's a key Fibonacci zones. Okay, I was telling you between 38%, I think 50%, if my recollection is correct. Okay, and now there is a kind of selling going on. Another thing that I said before in my previous video is that this is not a season when people usually buy. Okay, from July, okay, up to October, there is a tendency, there is a bearish tendency. People are selling. Those who bought it, okay, those who bought it in April, okay, are taking profit because they know that the market will retrace back, okay. So they don't want to risk their profit, so they're taking their profit, which is normal. So people shouldn't resist that selling because people want to bank their profit. It's not a big deal for the market. It's just a bit of pullback, okay, a healthy pullback. But when people try to block, okay, the movement of the market in one particular direction, and then it create what they call, a short circuit, okay. So suddenly we have this big movement to the downside instead of having a gradual, okay, healthy, okay, movement to the downside, okay. Myself, I can sell, I can buy, but I know some traders have difficulty to trade in both directions. They will look only for opportunity to buy, and if there is no opportunity to buy, instead of selling, they will sit on their hand. I don't know why, okay, because I think we were consuming, everybody you get used to go to Walmart or Marks and Spencer in London, or what a big shop. What do? We buy things, okay. We are a generation of consumers. We like to buy things. But when it comes to trading, you should train your brain not to behave like a consumer attitude where we keep buying. We have to be able to make money in both directions, okay. In fact, the market will fall faster than it rises. So the money that you will make when you are selling, if you sell it correctly, is very fast. You make the money fast. I don't like myself to remain too long in the market because I know it's not my father's business. I want to come in quick, take my portion, and say thank you and go away. I'm not greedy trader. I take the one that I'm happy with, satisfied with, and I'm going away. Even if the price continues to go down more than I expected, okay, I'll come back tomorrow and look for another opportunity. I don't miss any opportunity, okay. There are plenty of opportunity in the market. If I take half of the profit I'm supposed to earn, it's better than losing, okay. So I'm not going to be kicking myself and say, oh, if I remain the trade, I'll make 900 pip instead of 100 pip. I'm not going to cry about that. The important thing is that I take my portion, okay. So when you are trading, also try to have that mentality that there are plenty of opportunity in the market. You want to take your portion and then go. If the price continues further down or whichever direction you were selecting, is nothing to regret at all, okay. So this is how myself I approach the market because I lost so much money in the past. I like to be humble when it comes to trading, and when I see profit, I try to protect it. I don't want people to grab it away and then my winning position become a loss, because that will affect you for days. This is what creates the emotional wrong decision making, okay. So right here we showed it, as I showed you in my first part of my video called how to trade the overbought stochastic. I explained clearly how you will trade the overbought slow stochastic and time your entry carefully. This is a very excellent video because the slow stochastic, a lot of traders use it, okay. It's a timing indicator, okay. But if you do not know how to use it carefully, not only carefully but accurately, okay, in order to avoid nasty surprises, as I like to put it to you. It's not helpful, okay? So go back and watch the first part of the video called how to trade overbought stochastic. Learn it once and for all, master it, own it, test it, practice it till you know how to do it properly. Next time when you see the overbought stochastic, know exactly when the bell will ring for you to sell. Don't just jump on it, okay? So this is it. This is the second part, and now we sold it at 105.05. The price went now to 105.17. That's not too bad. You can go home and laugh about it. I believe that the Dow Jones should continue the movement to the downside. Fell that down, but we will see whether there will be another opportunity to enter. Okay, so till next time, for those who want to join us, you may go to the www.stochastic-market.com. Till next time, enjoy yourself and be very happy. Thank you.